The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the last day of trading day of 2018. It is also the last day of 2018. What can I say? Dow is up 145 at 23,207. The parameters we are looking at, I want to see this week. In fact, I would prefer to see no new recovery high today above 23,381. As long as we're holding 23,150 by the close, and then we can make a leg B, I would prefer actually to see a sudden late spike rather than sell-off. We had that sell-off on Friday. And we've had numerous ones intraday. So I want to talk about a question I had on Friday. I was about to discuss it when it just other things came about and completely it slipped my mind. It was right here. I wonder if I can get it. Let me see. So we'll go to the ESH 118, 119. We'll go to the 10-minute chart. Yes. So on Friday, that was the 28th. Let me just get to the 28th. Okay, stop right there. Where was the spike? That was early in the morning? No, that was at 3 on the 28th. Good grief. Am I forgetting where that spike was? Was it here or was it somewhere else? Oh, I remember now. Wrong one. I want to go to the 2-minute chart because that's the one that I was going to discuss right here. Okay, so we've got 8:30 in the morning, 7:15. Right. So this is what I want you to see. The 7 o'clock. Let me check. 31. I had this prepared, but you know the chart moves. It's a 2-minute chart. Oh, is that it? 28th. Okay, we've got the what? 30th. Oh, I don't like this silence. Silence is never good. Never good on a radio show. Oh, even a TV show. Okay, 28. So I wanted to talk about something called the Eiffel Tower pattern. That's where we get a single leg A up. You can have other chart formations, but basically what it is very often in the futures in the morning, you'll see a sudden spike to the upside at 8:30 Eastern time when there's some economic news, and then there's a very sharp pullback. And if that pullback goes about 2/3 lower than the peak, there's a good chance you're going to come all the way back down to what I call an Eiffel Tower or a single leg A syndrome. Why? Because you get this one leg that goes spiraling to the upside, looks fantastic, except it's news related, and then there's a sudden drop to the downside. So I had a question, and it's a really good question because it's something that I was pondering about, just something. I always look at these things. Are we seeing a single leg A up in the Dow or most of the indices in that move up that went all the way to highs, recovery highs on Friday? So the way I look at it is, number one, the extension that pushes the price higher is usually news related, and it takes it considerably higher, and often it's almost by itself. It's not like a V-shaped recovery. It's kind of static, and then suddenly there's a spike to the upside. So you're looking at the land, and then suddenly there's this Eiffel Tower that spiked to the upside, rocket ship, and then it comes back down. This is very different here because the stochastic did give a fabulous single-digit number, then a fabulous, only meaning that that's what we were looking for, and then the reversal to the upside, There were a number of downside surprises, even as it was turning. We know that because of our entry positions and the Dow. And then what happened was there was that huge spiral after that secondary decline, and that really was a single A failure pattern intraday on the 26th, goes to a lower low, and then it starts that massive move that goes to 22,878, one of the biggest moves we've had in a long time, to the closing price. And then it follows through the following day on the 27th. And then on the 28th, Friday, there's a new higher high, and it touches the 200 period, it touches the 14-period exponential moving average, the black line, and then closes just a tad under the pink line, which is the 9-period moving average. So what I'd be looking for here is a complete reversal. What I say to my subscribers to my opening call every day, I give a very detailed report, and I tell you what to look for in my opening call. Let me just see if I can find it right here. Yep, there it is. So right here. So this is the daily. Up there's the daily chart, and I discuss what we're looking at, why we're looking at it, why we went long, etc. And then I say, if today the Dow is holding a plus 100 points or more at 1110, and it was just like 120, 114 at that particular time, there should be a strong year-end close helping the December monthly candle. So we'll see if that's going to come about. So I'm looking at this and I'm saying the technicals are actually confirming. It's not as if there's a single leg A and the technicals really weren't moving higher. They were moving higher. The histogram, you can see the little vertical lines there, red lines. So I always show this chart. One is I call the naked chart only because it doesn't have the MACD, stochastic, and on-balance volume. And on the right, the same chart with the technicals involved. And here on the left is other things, Chapman Wave 5, etc. And I give a detailed account of what we're looking for. And I do that over the weekend. I sent, what is this one here? Let me just see what this one is. Can I read it? Yeah, so this is the cues, a very detailed daily, weekly, monthly, I articulate all the things that could be positive, all the things that could be bad. What are the levels we're looking at? What does each time frame say? I did the same thing. Here is the Dow. Dow. It's right there. The Dow, I go daily, weekly, monthly, and then in sum, what we're looking for. It's just very detailed. If you're looking for the picture, the way I put it together, and what can probably help you a lot in your different shorter term, intermediate term, longer term outlook, this is really I say that this is, I try to get you through the Straits of Gibraltar withoout hitting the rocks. Hopefully that's the case, and it has been for a long, long time. Hopefully we can keep that up. So these are all the different charts. We're looking at the Qs, the SMHs, etc., and plus a detailed report of what we're looking for in today and what positions we're putting on and why. Now, if you're looking at the Dow, so far, is holding nicely between the 14 and 9-period moving average and the daily. I'm not interested. The weekly chart needs to clear 23,450s sometime this week. It must be sooner. It cannot be later. I want it sooner. I want to start a gray leg A. Why do I call it gray, just like this one's gray? Because it's deeply under the previous peaks. It's really the starter position. I needed to confirm with the MACD and stochastic to get a buy signal to buy mode. At this point, we're just long, but we haven't even got a buy signal yet. I'll be back. Dow's up 168, S&P's up 9. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So it's a quietish day. I usually get at least 8 to 12 or more questions sent to me. It's very quiet, so let me just do this. For that single leg A-up syndrome, if there is a close below 23, I would have to say, what was the high? 22.87. Below 20, it's at 23, 2018 right now in the Dow. Below 22.830, let's call it 22.800. This week, any day this week, I would have to say, you know what? That particular syndrome is alive and well. If the MACD deflects lower, but if it's still rising, stochastic still rising, and there's this one-day aberration that just suddenly pulls back, maybe this is part of a stuttering start or a spluttering start to a move higher. At this particular point, when I went through so many charts over the weekend, I kind of liked what I saw, not for the low, but for for an important basing period. That's really what I'm looking at here. So we went long a couple of stocks. We're looking to see if those are the ones that have some kind of upside bias for at least 2-3 weeks. We'll see what happens. This is the most important week. They got to take off right here. I'm not messing around. Got small positions, tight stops, well, a little wider stops than usual, unless we get an extra position in each one of these. We have set it up so that a couple of them, we want 2 positions. Okay, this is 2 small positions. All right, so the S&P parameters are pretty much the same. Stuck between the 14 and the 9-period daily moving average, and the MACD's improving, stochastic's improving, not great, but improving. I want to see a 24.94 right now, up 8. I want to see in the next, this week, I'd prefer if it's by Thursday, I want to see a nice breakout above the 25.20 level that was the high on Friday. I want to see something like 25.23 or 25.25. To me, that would be just ideal because it will say we've had 5 or 6 sessions with basically rising highs, rising lows and higher highs in the main. We've made a gray peak A maybe today and then start a leg up B on Wednesday or Thursday. That's what I like. I don't want to see a crack below the 24 to 24.96. I don't want to see a 24.65 taken out any day this week. All right, QQQ 1, 2, 3. Within the Qs at 153.76, up 79 cents. I'm looking at 153.78. 155.60 says, yep, we're starting to break the 9-period moving average decisively. Now we've even tackled the 14-period moving average, which we haven't been above since the 13th of December. Really nice action. Doesn't have to be a V-shaped formation. I've drawn an arch formation, and that's all I want is to see higher prices, preferably higher lows, but I really want higher highs, recovery highs, that is. That'll help the weekly chart, but the weekly chart and the monthly chart and the Qs are, there's a lot to be desired. This is it. They're all in daily, weekly sell modes. The monthly is in a sell signal. By the end of the day, I might call this a sell mode. I'm pretty sure I'm going to have to call it a sell mode. That means you've got time. You're going to have to use time. Just a real quick thing. Someone asked me about the E-mini. Yep. The E-mini right now, trading very nicely. This is leg C to the upside in the 5-minute chart. And the same thing in the 10-minute chart. Just give you parameters real quickly. I know people like that. This is still a leg A in the 10-minute chart. So the parameters are real simple. If in the next hour, give it 1 full hour, if there is a close below the low that was made in the 10-minute bar just previous of 24.90.50, we're at 24.97 right now. If there is a close below that, it says, it's going to be a real tough day, just kind of hanging around. Nobody knows really what to do, and that will be reflected in the market. At this particular point, I think the fact that we haven't broken down yet today, even though there was a pullback, I think the people that are going to be buying, the ones that are left holding the fort, I think that they're going to be buying. And on the upside, at 24.96.75, any 2 closes above 25.02 would be very positive on the day. All right, and now we've started leg C in the 5-minute chart in the E-mini. All right, enough for that. Now let's get back to the nitty-gritties of looking out. So I am anticipating that some stocks will begin their support level cushion projection for the month of January this week. The higher they can break above the levels that were made last week, the lows that were made last week, and then the low that is made between now and Tuesday, the higher they can go, the more confidence I will have that we're looking at an arch formation. Can it last longer than just 6 weeks, maybe 2 months, maybe more? I would say yes. But don't believe all the news that you're hearing, either bad or good. Just look at the charts and look at the way that, I mean, for instance, look at the RTH. We're now done with the Christmas season, the holiday season, and we're looking at the RTH going from the 111, 112 area down to the 80, 86s, 87s. That is a huge hit. And now we're done with the major part of the selling season. This is kind of the rebuilding of inventory. It's just a new mental state. It's a new state of mind. So I think that the 97s to 101, strong resistance in the RTH, the Market Vectors Retail ETF. But I would love to see 84 is the 200-period exponential moving average, support in the weekly chart. I suspect we were going to go there. I would prefer that we go there. Well, my ideal when I spoke about it Friday was that we just keep selling off all. You do get the single leg A to the upside failure pattern, and we just keep coming down now. Then we clear out everything. Then we can establish a kind of a low that says, aha, now we can have some kind of series of higher lows where pretty much the bulk for key indices the low has been made in this first month. But I think that we were so oversold that we're going to bounce, and that bounce should take us somewhat higher, not much higher, but somewhat higher. Are we going to test the lows again, Basil time? Yes, in some of the indices, I believe so. But at the same time, I'm looking at that whole thing that goes October, March. Sometimes it's March, October, where you make a low in some indices in that first period, and then you don't go to that low in the second period. Some do, some don't. But I'm not yet, I can't talk about it. I need the whole first week of January, probably first full week going into next week, to be able to discern how it works out. Because this monthly candle right here in the ETF, the RTH, look at this. Keep your eye on that right there. You see it's decisively broken the 200, the 14 period, the black line, the 14 period moving average, and the MACD is just about to turn down. Stochastics at 77%, under 80%. And now look at this. This is the Dow. Look at this candle right here. This candle is also, you've broken down. But so far, the wick is much longer. So if there is, I'd love just to really fool everyone. I'd love to see a close today, maybe 150 points higher than where we are right now. Look what we're going to do to give you a Chapman Wave Roman candle in the monthly. Wow, what a decision!
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so now let me just go through this again. Look at the way this is hitting the 200-period moving average in the 2-minute E-mini. Let's get out of that. We're going back to our story. So there are a couple of things going on. If the Dow does have a very strong close today, if it closes, it has to be a Chapman wave Roman candle. It's a 50% or higher that you want to see from there. So that's 20. Oh, you'll never get to 23,960. So that's really what you'd need. If it goes to 23,600, I'd say that's closer to the Chapman wave Roman candle. I'd really like to see it 50% of the body, and then the wick is another 50% down. The body can be a little less even. But when it's a little more, it's actually a negative candle. So I'd love to see it do something really weird so that it really makes it challenging for us. Because look at the monthly charts. It's not a good candle for the QQQ, the IWM. IWM right now, where did that go? IWM trading at, hello? There it is. IWM is coming up. I said IWM. I don't think it heard me. Do it again. Yeah, I think it said overloaded. I've got some stuff saying, got to get rid of things. Yeah, don't like that at all. All right, so I can't do that in this particular moment. It'll be there momentarily, I think. There it goes. IWM trading at 132.83, down 3 cents. You see, as long as there's a big discrepancy between the different indices, you can't have the generals leading if the soldiers aren't following, and that's make it as simple as possible. This is a really poor, and I know I heard a lot of people talking about, oh, the Russell 2000. You've got some of the other bank stocks in there, not the big ones. They're not called money center banks anymore. They used to be called money center, but Wells Fargo, etc. J.P. Morgan. Now, the way I'm looking at the chart, you're going to need some kind of catalyst to the upside, at least for now. You didn't get the January buy that you get in the small caps very often in December going into January. Maybe it'll be January into February. I don't know. All I'm saying, this is not a good-looking chart. You've got 137.47, 200-period moving average, weekly resistance, and you're down at 132, 7 points. I mean, that's a lot to get to. So all I'm saying is that look at everything individually. We're being very selective here in the choices. We have a bank stock. We have a tech stock in the business sector. We have a stock where it is just a massive conglomerate. And that's the only way I can do it. I have to do it that way because I'm trying to be as diverse as possible. We've got the Dow. So I'm looking at it and saying, just be selective. Don't be aggressive and put the stops in. I made them a little wider for different reasons than usual, but very limited entry into the long. We had a big cash position. It's a little less now. So I'm looking at this and I'm saying, okay, IWM is a bit of a clue. I want to get on now because we've got questions. I asked the people to give me some symbols to look at. Doji candle in the gold, 1282.9, down 0.1. Makes a new recovery high today, and the new recovery high is at 1286.5. It is way above the 1259 200-period moving average, way above the 9 and the 14 at 1265 and 1271. At 1283, you've got quite a bit of a cushion, a really nice move. Yes, you're just hitting the top part of the Chapman wave inside track repellent up channel resistance level, but this weekly chart is good because it did break to the upside, getting closer to the 1303 200-period moving average. Now I'm going to say that there should be really good support in the 1250s. And at the same time, I'm looking at silver. Now, we've seen so many times over the last 12 to 18 months that silver doesn't participate. But then when it does, I don't like what I'm seeing here. I got these notices saying you need to adjust your easy language to reduce the number of legacy text objects in the analysis technique Chapman wave projections. Failure to do so will result in increasingly slowness of your platform. Please adjust the easy language to drop the oldest objects on the chart. I thought I took a bunch off, and if you don't do that, you could have a serious crash. No. All right, let me just close it out. I saw you. I understand that. Let's go to silver. Silver is trading right now at 15.54. It broke above 1520s. and went straight to 1553 today, above the 200-period exponential moving average. This is really good. Let's see how the PAAS. Let's just see PAAS. Let's see if not good. This is not good. PAAS. All right, we're talking about gold and silver. Let's go to Victor in Paramus, New Jersey. Victor, how are you?
Good. Hey, I was just reading on Zero Hedge about all the Teslas back stop. You know, they have 3,000 back ordered. You know, sitting on the lots.
They have back orders. Okay, that's good.
Yeah, no, they have that many cars sitting, not being sold. And it's just funny. I was reading an article. I live in Paramus, and they're just stockpiling the Teslas all over these lots. They're like renting them out, you know, vacant lots, and just
really?
Yeah, but that's just funny. I knew they weren't selling the cars. But next thing, GILD. What's going on with that stuff?
So we're going to go from a GILD, from GOLD, from the gold into the
GILD.
I know. We're going from. I was just about to say we're going from gold to Gilead Sciences, an Israeli biotech company trading at 62.31. It made the arch formation in the weekly chart, went to a peak E from the low that was made back in the week of the 4th of May. 64.27, made a low last week just above 60. What was it? 60.32, and it's trading right now 62.30. You know, I looked at this recently because I know that there are a lot of people that have been in these stocks, and Gilead is the name that always comes up as a fantastic company. But I'm looking at the chart and I say, you know, it might be a fantastic company. It was trading at 123 and it got cut in half. And the first time round, going to the 62-ish area back in early 2017, rallies to just under 90, and then it takes off 50% by going to the 60 level. There's something not right about. Do you have any position in this company? Do you have a?
No. I just looking at it. I don't know. Maybe they don't have enough drugs in the pipeline. I don't know. I thought it was one of your better.
You might be right that maybe I never thought of it that way. That maybe what they have is good, but they don't have enough, because now some of the companies are actually broadening out. They've had a lot of infuse of cash with the actual pharmaceutical companies adding to it. I'm just going to say to you that I don't see anything yet, but I do see the start of attempting a base right now for the daily. But the weekly chart still needs work. You know what? Do you ever use options?
No. I wish I understood that. I could probably make a lot more money using maybe
yes, maybe no, but it would lessen the amount of money you'd put out. I was going to say to you, if this can hold the 60 level, if it can hold 61 all the way through Thursday and Friday, I'd be inclined to buy a 65 call. Going out all the way to February or March. You know what? Hold on a second. I want to look at the IBB a little closer as well. Can you hold on?
Yeah, I just got to go, but I'll list it on the phone because I'm working.
Okay, great. I will be talking about it. Go on, Victor.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So, just to confirm for Victor in Paramus, New Jersey, we were looking at GILD, G-I-L-D. And I can see I'm going to have some problems here. I better get this resolved very soon. GILD, come on, there it is. So wow, do I say a yes or a no? Yes, I'm going to stick with what I was about to say. When I'm looking at GILD, this is Gilead Sciences, and I'm trying to get back to that page. My thinking here is that if it holds steady and it's able I'd sacrifice a point by saying if it's able to trade above 63.34, I'd then start a very small position. I wouldn't get carried away because that weekly chart needs a lot of work. But if it's able to break into the 63.30s. So there are two ways to do it. Either, Victor, you could nibble at it right here at 62.29, but I'd have a 1 point stop or less, because if it starts to pull back here, it says, uh-oh, it hasn't even got strength to move with the market, not a good sign. But if it's able to rally, because up 42 cents today, it's actually doing, it's at up 0.69%, which is in line with the indices themselves. That's one way to do it. You just start your position. Then you could add to it if it starts to break to the upside with the market. I don't want to do it either independently. I want the things to go together. So that's what I'm going to say to you. If you want, you can start. I'll look at it again maybe not Wednesday, but maybe Thursday. Just remind me, I'll look at it again. But this is the way I'm looking at it. But I wouldn't be expecting, based on the monthly chart, anything more than a pretty nice bounce. And that percentage bounce is nice, but not more than a bounce. I think it's got a lot of retesting to do. All right, now we've got questions about, so I wanted to go, so I spoke about gold, spoke about silver. Now, this is very interesting. If you look at the EUR-USD, the euro-dollar currency pair, trading at 1.14, this is a start in the weekly chart to at least establish some kind of a base, but really it needs to go to 1.151, maybe 152 to really establish some upside momentum. It could do that this week because the dollar is weakening, but let's see if it's able to. The USD JPY, that's the yen currency pair, yen currency pair, trading right now. That one went quickly, and this one's going slowly. Let's just tap it very gently. There we go. So it warns me. So that is down sharply. Monthly chart hitting the 200-period moving average. Weekly chart under the just under the 200-period moving average, and a very sharp move down in the daily at 109.69. Yeah, this is not good, except that it's becoming a little bit oversold, funnily enough, in the daily, not the weekly. The weekly still has a little bit of room to go. Now we're going to go to the dollar. So we're looking at the dollar, and I'm looking at the dollar, and I've got a trend line at about 96. It's at 96.16. It's fascinating that the dollar's been making this arch formation, very slow but very determined arch in the daily, very, very slow in the weekly chart. And all I can say is that if there is a close below 95.80 in the next couple of sessions, there's a real good chance that gold will hold steady and start to improve a lot more as the dollar weakens. And we've seen this before. The dollar can even go to the 95.30 area, 95.20. Below that says it's a little bit longer, the consolidation. I suspect we do have time for the consolidation. You see, we've completed a lot of the stalk leg, the rally, the peak D in the weekly chart. MACD is turning down, stochastics at 75%. I think the dollar needs more time to digest these huge gains that it's made from the 88 area up to 97, 9 points, 10% in a currency. That's huge. Now let's go to the high-grade copper. Before it was down. Oh, it's down again. Not good. Let's put it together with wood, WOOD. That is the iShares Global Timber and Forestry ETF. A little bit of a rally, just a little bit, but their weekly chart still looks very poor. And now I'm going to go to the questions. A question earlier I had was that, Orly, O-R-L-Y. I believe it was Orly. Did I type it in the wrong place? Probably. O-R-L-Y. Is that what we're looking at? Let me just check that out. Noon. Okay. WPC, and you were looking at, I think, yeah, Orly. Okay. So Orly's trying to bounce at this particular point. Oops. Boy, I got a little problem here. I better get this resolved. What am I going to do? It's got those Chapman wave projections that I love so much, and it said that it's causing me a problem. Oh, I don't like that at all. Try it again. Here we go. Orly. Oh, not good. Trying to type it on the chart. Oh, I don't need this. And there it goes again. It pops up. Look, I'll show you right here what it's got. It's got, you have exceeded 10,000 legacy tax objects. You're about to crash. Please don't crash. I couldn't re-letter my whole thing. Here we go. Orly. Thank goodness. Orly is trading down 93 cents at 341.17. My thinking, this is not Orly chart, there it goes, is that there's almost like, I don't like to do it, it isn't a perfect one, but I'm just going to put it in to show you that I'm looking at this more as an arch formation, even though I've drawn in an oval. And this says to me that you've got to be somewhat careful of Orly at this particular point, because two things at once. There you go. Because this arch pattern here needs to see a decisive break into the 343, 345 level. If this week Orly is able to get to not 345, it needs to get to the 348 to 349 level. If it's able to do that this week, that is really good action. If instead it actually drops below 333, that's not going to be a good sign at all. It might just go sideways, but the upside is very limited. So would I short this or would I buy it? Right now, nothing. I just look at it and say, okay, Orly, tell me what you got at 341. There are other stocks that we could mess around with for 341. Okay. Next question I had was PHM. That's Pulte Homes. Pulte Homes right now. Is that also going to be slow? I don't like this. There it is. Pulte Homes trading at 25.60, down 44 cents. That weekly chart says it's trying to establish higher lows and higher highs, but at the same time, Pulte Home trading at 25.60, down 44 cents, says to me that Wow, isn't that interesting? It has the same Orly daily pattern, different price, obviously, 10th lower. Yeah, I'm not looking to buy it. I did look at the home builders the other day to think, okay, lower rates lately, will that help the market? Will that help the housing market? My thinking is that something else is going on in the housing market. So here's what I'm going to say. If you're long all PHM, Palte Homes, I would just say if it closes under 25, just be a little careful, take something off. But if it manages somehow by the end of the week, by Friday of this week, it's over 26.53, that's just 70 cents higher. That I would say to you is much better action. And then the 26.98 200 period exponential moving average will become a target. Would I do anything right now? I'd have to say I'm going to have to wait the day, or maybe even into Wednesday, the beginning of the year. So that's a Dow's up 191, S&P's up 13.37. I haven't spoken about the TLT other than to say it's rallying here. It's at 121.36.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's Setup 9 Count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Just real quickly, that single leg 8 to the upside, just once again, if there's a really sharp sell-off at the end of the day, and Wednesday when we get back for the first trading day of the year, there's a 300-point sell-off, I have to consider that this is a failure pattern. And just too many people got bullish. But I don't think people are buying bullish. They're just getting bullish. That's my guess. So I had a question here. Jason wants to know about NTR, which is Nutrient Limited Potash and Agri merger, trading at 47.03, up 83 cents. Yes, I like this for, number one, a trade. And number two, there's a chance, based on the action that I'm looking at in the daily, that there could, in fact, be an improvement in the weekly chart, and it's nice because you got very clear parameters at 47.03. I like it right here. I would have a stop. I'd have to give it more room. Now, you just keep in mind that this is one of those cases. I'm not giving you a tight stop. I'm saying the stop would be between the low of the day before and the day before that. So I would put a stop. It's at 47.03. Gosh, if you're able to, you're going to be buying calls on this. If you're buying calls, that's much better. But very short term, 45. It's a whole 2-point stop, 5%. But that's the way I would play it. Why? Because I don't think it's going to pull back. And if it suddenly breaks to leg B above 47.36, you've got yourself leg B. And all you have to do is raise your stop on the position and then maybe even keep that position right now at 47.03. And then you could add a trading position. So that's the way I would look at it. But if you're doing calls, this is a good place to get it. Why? Because I think it's trying, based on the daily and the weekly candles of last week, that it's trying to establish some kind of a base. And you'll know real quickly, because if it fails, I think it's going to fail all in one day. It'll come down. If it's not, it's going to hang out here for a little while and try to get to 48. Next question I had was CTL. So before, don't forget, there's a Tiger sale going on now. I think today's the last day. Maybe tomorrow, obviously, it'll be up. But take it, I mean, what an opportunity. I was thinking today, the only way you can get a real break is with the Tiger dollars or at a parking meter. Put in your 25 cents and you save yourself a $25 ticket or even more. CTL, I don't like this chart right now. I'm going to have a look at it later on, but right now it's not 15.25. Tim, I think I would hold off on this one. If you want to nibble, you can nibble, but make it a 14.99 stop. This is just beginning. I need more evidence. Have a great day. Stay tuned.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.